Do you buy the dip again on Alibaba after reporting Q2 earnings and guidance that absolutely disappointed investors? We'll talk about that and more on today's show. What is going on, investors? Hopefully, you guys are having a great day out there. Your day would be a lot better if you weren't anywhere near Alibaba stock. This stock is down big time this year. We're talking over 37% over the last year. And even heading into today, after reporting Q2 earnings, the stock's down about 6% pre-market, sending these shares to levels that we have not seen in many years over at Alibaba. We'll get into the numbers. We'll take a look at them, take a look at the revenue, the growth rate, the guidance, what is sending Alibaba shares downward. We'll talk about the different business segments that Alibaba runs, and then we'll talk about this from a broader perspective. Take a look at what hurt the profits. There's a big old number here sitting on this operating statement that obliterated the profits over at Alibaba. We'll talk about that broadly as well. And then we've got to come over to the stock chart. From a technical perspective, this stock has fallen off an absolute cliff and it looks terrible, but can we hit areas of support here that have really materialized over in the past? And we'll see if they're going to materialize here in the future for Alibaba shareholders. Now, the Q2 numbers came in. We have a revenue. This is in the Chinese currency of about 200 billion. Now, that is up 29% year over year. And look, compare it out here to Amazon, probably its closest cousin out here in the United States. From a revenue perspective, Amazon grew only at 16%. And they're guiding to, I think, only like 8% improvement in the fourth quarter. And so this company is still achieving relatively strong growth rates, especially when we compare it to similar companies out here in the United States. Now, what I think is having investors, their stomachs churn a little bit outside the Chinese government. Okay, we could have an entire show on what the Chinese government is doing to mega cap companies in its country like Alibaba, particularly Alibaba, and the fact that they're making this company set aside billions. I mean, we're talking about billions aside for different kinds of social programs. They're making this company divest in certain investments and certain assets that it has. They are making it very difficult on this company, and it throws a big wild card when you're trying to invest. Look, investing is hard enough. When you've got numbers, you've got different currencies, you've got different cultures, you've got different countries that this company operates in, that is hard enough to plan. And now you've got probably one of the most controlling governments in the world laying the smackdown on the company, one of the largest companies in its portfolio. Well, then it makes things incredibly difficult when you have the Chinese government going after a company like this. Now, what is probably sending the stock even lower outside of all of that overhang is the full year guidance for 2022 came in and it's not good. Okay. So they're expecting over at Alibaba, their revenue to grow between 20 and 23%. Now, unfortunately, the consensus was much closer to 28.5% growth rate. So a full 800 basis points on the low end, lower than where consensus went. And keep in mind, with consensus, there were likely people expecting well north of 30% growth at Alibaba over the next year. The company's coming way under that. That is likely contributing to this stock heading lower in the pre-market, down, like we said, about 6%. We'll talk more about the stock price here in a second, but we'll jump into these numbers. Okay. What I noticed right off the top, these are the different business segments that Alibaba operates in. I think the most interesting thing is the fact that we have this other category, and that happens to be Sunart, Tmall Supermarket, Fresh Hippo, and direct imports. What I noticed, that was 17% of revenue in the previous period on a quarterly basis. And now that is 27% after fantastic 111% growth on that. And then you've got your customer management revenue that came in at a slightly much lower growth rate, just 3%, basically flat, essentially a year over a year. It could be that this other category eventually overtakes this if it continues these types of growth rates. Everything else looks to be growing at a relatively steady rate. We have this 31% growth rate, but like we talked about, for the upcoming year, Alibaba is expecting a big pullback in this, okay, in terms of growth rate. So that is something investors are concerned about. And then we also have our cloud computing down here that grew at about 33% year over year. When you compare it to United States cloud computing, this is well under what Amazon is doing, what Google and what Microsoft is doing. And then if you take some of the smaller players, it's way under that. Not only that, this cloud computing division is not profitable. profitable. In fact, Alibaba looks a lot like Amazon, just in the reverse. Their commerce business actually makes money. It's this cloud computing and kind of these other divisions that they're working on. These are not making money. So that has investors probably concerned a little bit, that the fact that our growth rate is slowing in these divisions, and these are not profitable divisions from an operating perspective for Alibaba as well. Now, in terms of a higher level here, we'll come to our revenue. Here was that 200 billion RMB in revenue. That equates to about $31 billion here in the United States. You come through these costs and you come down here to income from operations. You see we went from 13.6 up to 15 billion RMB in the most recent quarter. And that looks good, right? That's about $2.3 billion. Now, that looks pretty good, but unfortunately for the last 6 months, we've actually declined on our income from operations, okay? That's a big worry for investors when the income starts to slip. You went from 48 down to 45. That's good for about $7.1 billion. So the company did a nice job, it looks like, in the most recent quarter to actually turn this income from operations around, because in previous quarters, it looks like it was turning negative, at least from a year-over-year perspective. Now, what absolutely just blew up this company's net income was the fact that you have interest and investment income. Last year, you earned 10.5 billion RMBs. This year, you lost 11.5 billion. Okay, this is a negative number. And so this obliterated, that's the equivalent to about $1.78 billion. So this just torched your net income. Okay, so despite earning more from operations, you have to subtract a big gigantic number instead of getting to add it. That turned your income before income taxes down from 24 billion Chinese down to 3.9 RMB. For the US perspective, United States dollars, that's just $612 million. I mean, we're not talking about a lot of money off of $31 billion worth of revenue. So this company basically slipped to break even from a net income perspective in the most recent quarter. That certainly has investors not excited at all. Now, for the last 6 months, paints a relatively similar story, although we are much more positive, okay? For the last 6 months, in net income before we pay taxes and those other types of things came in at $7.7 billion, but it's down tremendously from the previous period where we're sitting at about 81.4 billion Chinese. Now we're down to about 49 RMB. I keep saying dollars. Look, I think you guys understand when I say RMB, that's the Chinese currency. It's not necessarily referred to as a dollar. All things being considered, not looking very good from a financial perspective, at least in a vacuum. When we look at Alibaba from a net income perspective, it's down big time. And we don't know the impacts in upcoming quarters from the Chinese government. Like we talked about, this company is having to sell off certain assets. It's not going to be allowed to grow this cloud computing business like it probably thought over at Alibaba. Alibaba is going to have to force other competitors into the market. They're not going to be able to maintain a dominant position in cloud because the Chinese government simply is not going to allow it. They're going to force them to divest a lot of their media assets and other assets that they have. They might have to take a loss on those types of investments. In fact, that's what we saw right here on this, is the fact that they took a loss on this interest and investment income, and it was a big one, and it really impacted earnings, and we're not sure. We're just simply not sure if that is going to continue with Alibaba or if this is something in the rear view mirror. Your guess, quite frankly, is as good as anybody's out there, because the Chinese government can be unpredictable at times when it comes to these types of things. Now, from a technical perspective, this stock is in a big, gigantic downtrend. There is absolutely nothing to confirm that this downdraft is over, okay? We are in this downward channel, and it doesn't look like it wants to stop. Now, we are seeing a little bit of support for the stock down here. In fact, we made a lower low earlier this week, or a few weeks ago, quite frankly, back in October, at about $130, $140 per share, more exact, right at about $140 per share. Now, the stock is trading up here at about $150 per share. So if we can start seeing a sign of reversal, make higher highs, I tell you what would confirm that this downtrend is I wouldn't say over, but has a higher probability of over, is this stock price needs to get above 170, which I am marking out right here. So we've got this upper channel line right here. That would take out these highs that we made here, and then we would make a low here, lower low, and then a lower low. That would signal to me that this stock is trying to bottom, okay? Whether or not it did bottom or it has bottom at that level likely has to do with factors that are completely outside of our control, particularly the Chinese government and how they're going to regulate this company. I'll let you decide if you want to take that risk. Putting all that aside and just looking at this from a technical perspective, you're looking for this one. In my opinion, I would not touch this stock until we got above 170, or maybe if you want to step in a little sooner, 160, since this is technically where the lows are here. If you do get above that, okay, that could signal that this stock has started to bottom. But look, we were at 160 on this stock just a day or so ago. So it's not like we haven't been up at this level and then saw this stock retreat rapidly back down to here about $150 per share. Now, this level south of 150 has some historical perspective on Alibaba as a level that will hold. Okay, this stock actually traded as low as about $130 per share back in November of 2018. Yeah, 2018, that is where this stock found some support at this level. I have this on a weekly chart because when you do these big, gigantic downdrafts, you have to find levels of support that go way back. And in this case, we do have some level of support for Alibaba in this, we'll call it $130 to $140 range. Even up here at the 150 where the stock is trading right now, this does make a little sense from a technical perspective. You had the 150 area act as a little level of support, but we're talking like 2 years ago, okay? And so I would monitor how this one acts. Me personally, I don't want anything to do with the Chinese government. And I'm not saying that from a disrespectful standpoint. I am just saying that as from an investor standpoint. No disrespect to the government or the people of China. That is their country. That is their prerogative to run things how they want to. But me as an investor get to decide how I want to run things. And I don't want any piece of a government that is looking like they're laying the smackdown. I mean, the absolute smackdown on companies like Alibaba. I do not know if the worst is over. I don't think anybody does. And this price chart right now is telling me that maybe the worst is still not in. But from a technical perspective, if you like this one, we are very close. I mean, we're talking very close to levels where this one will technically bounce and find some support and eventually make a reversal. Me personally, if I did want to get into this stock, I would really wait for the confirmation from a technical perspective. That will mean not buying it at the dead low, okay? And so you have to be comfortable with that as an investor, but just understand, if this one reverses and getting momentum, you've got massive upside, like 100% upside on this one. And so I would wait personally for this one to reverse. Again, we talked about how for me, that level is between 160 and 170. I wouldn't touch this stock until we started putting some candles up in this level. That would show me that yes, maybe we're starting to form kind of a V or a U formation down here at these price levels. Buyers are stepping in, sellers are driving away, and that will help drive this stock price higher. In the shorter term, if you can get some momentum on this stock, this thing could easily get back up to $180, $190, even $200 per share. Even if you bought it at the 160, 170 mark, back up to 200 is fantastic. I mean, we're talking about fantastic gains. Some of you are probably stuck big time on this stock. You bought this stock way higher than that. What you need to learn is to set some stop loss. There were some key technical levels that were broken on this stock on the way down. I think particularly here at $210 per share. Once you broke through the highs here or even here, this we're at 230. There were lower highs down here at 210. Once you broke these technical levels here, these previous highs, it was, I mean, it was like a hot knife cutting through butter for Alibaba. And you see the stock actually hesitated for a minute at these levels. And then once it broke through, it was literally just a couple weeks later, we were all the way down into this lower zone. So when you buy stocks that are on a monster move like Alibaba, look for areas underneath. If it starts to reverse, and you don't want to lose your principal, set some stop loss or start selling the stock as it comes back to these levels of previous highs, because if it breaks through here, you see what happens. You go from 230 all the way down to about 150 in the matter of just a month or two. That is a way to protect your investments, especially when you have highly volatile stocks, which wasn't really the case with Alibaba. But once the Chinese government got involved on this one, it changed the investment thesis tremendously. It got a lot of people here in the United States out of these stocks, and now you're flying solo when it comes to Alibaba. We'll see if it's able to turn around. I wouldn't necessarily bet on it in the shorter term. That was Baba. Hopefully you guys enjoyed this video. I'll be back again soon with more. Good luck with your investments.